because it was weather-related, the drop in the PMI, does it change the underlying views of officials at the Bank of England? What do you think, Jeremy?
Well, first of all, I'd say partly weather-related, I think, in that context. So I think the impact of the consumer confidence element shouldn't be downplayed.
Yeah.
So I think that, is an important dynamic. I think in the context of the Bank of England, it seems as though they're very much set fair towards that presumption of a rate hike. You know, what could derail it? Well, of course, that we get the first estimate of Q1 GDP prior to that. And in the context of these retreating PMI indices, there could be a risk that the number could be sub-trend. We may, if we look at the dynamics, particularly in terms of the retail side, may only get a quarterly increase of 0.2. Now, it doesn't look likely at the moment, but certainly that is a risk. Could that stay in the hand of the Bank of England? So I think the bank are very clearly predestined, or at least anticipating that they need to raise rates. I'm not convinced about the overheating argument per se, because I think there is still plenty of significant headwinds that are being faced by the consumer, even if we are on the verge of a crossover in terms of positive real earnings growth. I'm not sure that necessarily implies that the consumer sector is going to maintain the sort of growth which will...
Is it all baked into sterling? A big story today on the Bloomberg, Jeremy. Top pound forecasters are bullish as Brexit worries overplayed. We'll talk about Brexit in just a second, but the view is by some of the forecasters that are sort of top of the charts is, 8% from now to the end of the year rise in sterling. You're not quite that bullish, are you?
I'm not quite that bullish, and I think in the context of the way the market's positioned, absolutely markets have certainly improved the sentiment because of the reduction in the sort of the immediate Brexit fears that we've seen in terms of the divorce deal and now the transitional process being put in play. But if you look at the way the market is positioned, it's now net longs at 4-year highs. We're discounting effectively a Bank of England hike. So we have good news on the Brexit scenario compared to what we've seen. We've seen the presumption of discounting additional rate hikes, and we've seen that reflected in the dynamics in terms of sterling positioning. So the question is, what's going to be the characterisation? What's going to be the extenuating factor that's really going to drive sterling materially higher? Well, of course, a free trade deal, which would be easily negotiated. Well, of course, that's not going to be the case. And I think the risk has to be that markets are already discounting more of the good news than potentially any of the risk parameters. And, of course, political risks can never be ignored in the UK because we've got local elections that could be coming at the beginning of the month. So I think there's scope for sterling to lose some of its impetus prior to maybe having a slightly better period